Hey guys, what if I told you there was a secret investment that took no skill, no experience, no prior knowledge, it was easy, cheap, and it also outperforms most professional portfolio managers. This is a secret investment that I have most of my portfolio invested in, and it's generated massive returns since I first started investing years ago. Here's the thing, there's only one way you can get in on this secret, and I'm about to tell you. You have to smash that like button right now. In all seriousness, everything I said before that last statement is absolutely true, and the not so secret investment that I'm referring to is index funds. And even though this is a fairly well-known strategy now, there are so many people out there that are making investing way harder than it has to be. Even though index funds are fairly well known at this point in time, there's still so many people that are making investing way harder than it has to be. They're obsessed with finding the next Apple or the next Google or Amazon, or that stock that's selling for $3 a share right now, and it's just instantly gonna blow up to $3,000 a share a year from now, and they can go retire on their private island and never have to see civilization again. The fact of the matter is, you have to be extremely lucky to find yourself in a situation like that, and when it comes to investing, I wanna take the luck out of it. That's why investing in index funds has become such a large portion of my portfolio, and one of the absolute best, easiest ways to get diversified and also generate huge amounts of wealth without incurring all the risk that comes with trying to pick out individual stocks and just crossing your fingers and hoping for the best. So I have 5 big reasons why index fund investing is so advantageous for any investor. First, as I just mentioned, you get instant diversification. So if you buy an index fund that tracks the S&P 500, you now own a portion of all 500 of the companies that make up that index. So knowing that the S&P 500 is made up of 500 of America's largest companies, you're hitting all the major sectors. You're getting exposure in utilities, healthcare, financials, IT, real estate, you name it, it goes on and on and on. So simply buying one single fund automatically gives you exposure to 500 companies across all different sectors. Now imagine going into your investment account and trying to buy single stocks from each one of those companies, how expensive that would be, how time consuming that would be. With an index fund, it's all done just in one nice, neat package for you. And of course, if you wanted to further diversify, there's other indexes that you could buy too. To supplement that S&P 500 index, you could also buy an index that tracks international stocks, or bonds, or any number of different major indexes. So instead of going around racking your brain trying to find exposure to all these different sectors and all these different companies, you can just do it very easily with a handful of different indexes. And the next big advantage of index funds are that the fees are extremely low. And that's because these funds are passively managed. Unlike a mutual fund where you have a portfolio manager that's constantly actively going into each fund and buying and selling stocks and constantly tinkering to try and outperform the market, an index fund is simply just tracking the index. So there isn't a need for a portfolio manager to constantly be going in and messing around with different stocks or funds to try and outperform the market. We're just simply trying to mirror the market and move with the same movements as that. And there's been all kinds of studies that have compared index funds to mutual funds and which ones do better over the long term. And the evidence is in. Only about 22% of mutual funds actually outperform the S&P 500 over the last 10 years. And not only are mutual funds generally underperforming the S&P 500, but you're also paying much higher fees to those active portfolio managers for their time and effort to constantly trade in those stocks. And the number 3 advantage is that there's really no skill needed to get invested in index funds. Unlike picking individual stocks, there's so much that goes into trying to find winners and trying to find what the good values are that will give you a good return on your investment. And as I've mentioned, I've worked in the finance industry for several years. I have an MBA in finance, and I've had to take class upon class upon class on learning how to value stocks, learning how to look at income statements and balance sheets and figure out what all the key metrics are to find out if a stock is worth buying. And if you're gonna do it well, it takes a lot of time and a lot of effort. And so what if there's a stock that you're looking at and you go through the whole process of trying to find the true value of that company to see if the stock price is a good or a bad buy, and once you get through all of that, you find out you don't even really want to buy it, well, that just seems like a huge waste of time. And even if you do go through the effort and find that one great stock that you know is going to be a winner, unfortunately the market isn't always rational. And just because the price looks good or the price makes sense on a certain company that doesn't mean it's automatically going to go up. There's so much more that goes into it than just financials. There's technical analysis, and there's market sentiment, and there's just all these different factors that determine what the stock price is. So what you'll find yourself doing is just wading through a sea of information and financials and analysis, trying to figure out what's a good buy and what's not. And at the end of the day, it might not even matter. And I'm absolutely willing to admit that I spent a lot of my time and money learning how to properly value companies to see if it's a good buy or a good add to my portfolio. But yet I still come back to index funds time and time again, and it makes up so much more of my portfolio than what individual stocks do. And that leads me into the number 4 advantage, and that's just having a psychological advantage and peace of mind over your stock portfolio. So let's say you're still not convinced and you take time to research companies, run financials, run technical analysis, look at the market sentiment, and you find one great company that you know is just bound to take off and make you tons of money. And you've done everything right, and you just know that this stock is going to take off and make you tons of money. But then you wake up the next morning and you see that the CEO tweeted something stupid, or he's caught in the middle of a scandal, or they're being sued for something and the stock price just tanks, and you just lost a big portion of your portfolio right there. So then what? Are you going to panic and sell, or are you going to ride it out and hope that it goes back up again? And that's what you don't have to worry about with index funds. If you have one company that has a bad day or is getting sued or even fails, you have so many more to make up for it, and you can still have positive earnings even if one of the companies folds. And I can't overstate how nice it is just to have that peace of mind that you don't have to scour over your portfolio and look at all your individual stocks and cross your fingers and hope no bad news comes out. And as humans, we have such a big psychological effect that goes into investing. So many times we see a company that their stock price is gaining and we feel like we're missing out, so we have to hurry up and go buy so we can get in on all the fun. We see all of our friends and everyone on the internet making hand over fist, just money after money after money. And we feel left out if we don't get in on that. And so a lot of times we end up buying that stock too high after all the hype is already out there and everyone else has already bought in. And now we're holding on to that stock. But then as the price goes down, we're just sitting there looking at our portfolio lose value every single day. And so then you're faced with a choice. Am I going to sell it and try and cut my losses, or am I going to ride it out? Are these losses, is it a big deal? Is it something that I should be worried about, or is it just a blip and it's going to come back up? There's just so many questions, and so often whenever we try to time the market, we end up buying high and selling low, which is the opposite of what every investor tries to do. So if you just take a buy and hold strategy and diversify with index funds, there's just so much you don't have to worry about anymore with that. And the last big benefit to index funds is that it's simply just easy. I mean, how many times have you gone on to Google and started typing in, is now a good time to buy Apple? And you pull up about 1,000 different web searches and you find the top headline is absolutely, right now you should absolutely buy Apple because it's definitely going to go up 20% this year. And you think, oh great, well maybe it's time for me to buy Apple. But then you go back and you click on the next web page and it says, oh, well now's a horrible time to buy Apple for this reason and this reason and this reason. It's definitely going to go down 20% this year. And so who has time to commit your free time to scouring news articles and financials and stocks and analysis to try and find what the best thing is and what the best fit is for your portfolio? Instead, you can take about 10 or 15 minutes, go through a site like Vanguard and just go through all of their index funds and see, okay, what index is this tracking? What am I being exposed to? What are the benefits of this? What am I getting out of this? And even if you just take my advice from earlier and invest in an index fund that tracks the S&P 500, you know that you're going to outperform most mutual fund managers. You know you're going to outperform most hedge fund managers. And these people are the brightest of the brightest. These are the Ivy League graduates that are getting paid big bucks to go in and put these funds together and to actively manage them and to outperform the market. And even they can't do it. So you're automatically putting yourself in a position to outperform the best of the best, and you're not even doing anything. And as you can tell, I get pretty passionate about this because people make it so much harder than it has to be. And I'm not saying that you can't go out there and find individual companies that you believe in and want to invest in. I do that myself. but the great majority of my portfolio is housed within index funds that give me all kinds of exposure to different markets. That way I know that my money isn't simply just riding on one company or one CEO that who knows what they're going to do from one day to the next. So guys, please just take my advice and make it easy on yourself. Investing doesn't have to be hard at all. Take the emotion out of it, take the stress out of it, find some index funds, get diversified, and have some peace of mind with your portfolio that you're giving yourself all the advantages that you possibly can. And if you check out my description down below, I've put in a lot of my favorite index funds and a lot of the most popular ones that track the major indexes if you're curious on what the stock symbols are for those. This certainly is not an endorsement for Vanguard. They're just the company that I use the most. I really like their index funds. They're very good with their fees. But that's not to say there aren't a lot of other good companies out there with great indexes as well. Places like Schwab and Fidelity also have a lot of options similar to what Vanguard has. Anyway, I'm going to wrap this up, guys. Please like and subscribe if you like this content. I've got more coming your way. And again, get out there, get invested, make it easy on yourself. Till next time.